Hey everyone, this video tutorial is for my accounting friends who are having a hard time to understand accounting concepts. In today's tutorial, we're going to talk about the money measurement concept. Now, let's look at the definition and then I will try to give you a few examples so that you can work your way around it. In terms of the definition, the money measurement concept states that only transactions and events that have a monetary value can be recorded in the financial statements. Now, what does that mean? Let's say you bought a piece of equipment which costs $100,000. So obviously, if this has a monetary value attached to it, $100,000, so you can record that in the financial statements. However, there are items in a company such as maybe your employees, your brand, maybe your customer base, which are also important to the company, but you cannot attach a monetary value to them. For instance, how good your employees are, you cannot attach a monetary value and put that in your statement of financial position. So these cannot be stated in the financial statements. I'll give you another example. Let's say you had a training program in your company. And of course, the training program was meant to improve the skills of your employees. Now, when the trainer came in, and depending on the amount of hours that the trainer spent and the company paid the trainer, that has a monetary value attached to it. So training costs will appear in the financial statements. However, your productivity of your employees have gone up, the intelligence level have gone up following the training, but of course you cannot attach a monetary value to that, so that will not figure in the financial statements. So hopefully with these examples, you have worked your way around money measurement concept. Give this video a thumbs up and don't forget to subscribe to the channel if you like these type of explanatory videos.